What's up, Stephen Johnson? Hopefully, first time I'm gonna get this and have it done. I was on a record month. I was having like record weeks, 6K weeks, 5K weeks. I was up over $16,000, and then I just threw it away at the end of the month, and ended up going like minus 5,500 on the month, minus 5.5. And well, it's as you can see if you check in, it's a red month in the first and 6 months, and the red month's lower than all of the green months. So it's like what happened is terrible, but in context, if it was just a red month and it hadn't happened that way, you'd just be thinking, oh, well, you had a red month. Traders have like 9 green, 3 red who are profitable. But as an update, I mean, in terms of taking the loss, yes, like sometimes I wake up and think, fuck, did that really happen? And that kind of sucks. But financially, it's trading. Like I've said this later in the video, but I have freelance advertising as my main income. Trading's like an additional income. It's not really like, I don't class it as my income. It's a hobby. So like to give back a lot of money that I made doesn't really change my life, but what it does change is how I view trading and rules and processes. So it doesn't hit too bad now. Like say 5 years ago, it would have fucking murdered us. I would have jumped off a bridge, but I'm in a good place in life right now, so I'm good. But what I have learned and what has changed is that and I tried, like, it's not like this loss wasn't coming. This loss was coming. I'd been going on downswings of 3 and 4 thousand, then 5 and 6 thousand, then 9 and 10 thousand. Then a couple of times I went down like once 15. Then I nearly blew up and made a video about it where I like went down 28. And then now I actually ate the loss of like 23. So it's not bad luck. It's no one's fault but mine. And I needed it. Like, I needed to eat the loss. I needed to take it because my process wasn't right. Like, there's a couple of ways you can trade. If you've got like 10 million in the bank, you can add to your losers. If you've got machine-based discipline, you can add to losers. Like, I'm one of the most undisciplined people on earth in every capacity of life. So I can't add to losers in this. In March, I already knew this because I'd been going down in January and February. So in March, like, I've got the loss journal. I've got max risk imposed. I'm trying to really change my style of trading. So I'm like getting in and just holding, playing the big picture, then getting out. Because when you've got these calls, these intraday scalps, before you know it, you've been sucked in, or your size is wrong, or your size doesn't reflect your risk, and you're just fucked. And you get away with it once. It's a small tweak here and a small tweak there, but once discipline slips a bit, and you're out. So I need to change the system to make it as simple as possible. I'm in, here's me risk, and I might lose a bit here, lose a little bit there, might not get away with that here or there, but I don't take the 10 grand downswing or the 20 grand downswing. I don't want to make a bit, lose a lot. I just don't want to do it anymore. And honestly, I've got trading down where I don't need to trade fucking perfect. I can be in, let the big picture work out, be out, and not have the stress. Like, I don't need to be a perfect millionaire trader. I'll be a millionaire by just trading simple. And once the strike, like, I know I'm very good at making money, like 600 and what was nearly 100 grand, it's now 76,000, 77. I know how to trade. I'm very good at reading the market. So now it's just a case of just getting fucking risk down and making sure I'm just sticking to the process of never adding to losers, cutting the losses. And then right now, I've took realized profits off. I've took unrealized profits off. I don't see them anymore. I don't want to know until the end of the day. And it's perfect. I don't get sucked in. I don't take irrational trades. I don't need to make some money back. So I take something with more size, not thinking about the risk. I don't do that anymore. I look at me profit and loss at the end of the day. I don't just think, oh shit, I've hit me max loss. I'm going to talk to me broker and ask him to just take it off for the day and I'm getting back in tomorrow. It's $500 max loss. I've already spoke to the broker. I've said, do not let me take this off until March 31. We're re-reviewing this shit. Oh, sorry, April 31. It's 500 max loss. That's it. I'm expecting I'm going to hit it a bunch of times. Like, I'll probably hit it 4 times this month. I'll have a 500, a 550, a 6. I won't know when I've hit it because realized and unrealized aren't showing, but I'll hit it when I hit it. If I take 3 trades of a 150 max loss, then the fourth one takes us over the edge, and then I'm done for the day. But I know with 150 max loss on a trade and 500 max loss on the day, I can easily put in 800 days. And I might hit me max loss 4 times, so that's 2,000 drawdown. But if the other 16 days are 800 days, I know I'm going to hit somewhere around a $7 or $8 or a $9,000 month. So they are the main changes. You'll see it illustrated, but I'm thinking big picture. I'm getting in pretty much once or twice. Take 1 stab, take 2 stabs, take 3 stabs, and then I'm done. If I lose 3 times, I'm hitting me max loss, I'm out. I don't know what me realized and unrealized is, because it leads us to make emotional covers, not letting the trade run, or it leads us to thinking I'm down on the day and taking an irrational short with irrational size that doesn't reflect good risk management. So again, just to outline the month final time, I don't see me realized and unrealized. I've got a $500 max loss that I can't take off. I've got $100, $150 max risk per trade, and I'm playing the big picture. I'm not getting in and out, because I think getting in and out is not conducive to proper good risk management unless you're a fucking robot. So let's just play out, first of all, the SIAC big loss, how it happened and what happened and what the overall like different variables of the trade were. And then I'm going to show you like how I started trying to manage risk in March, and then how it slipped all the way to the big loss at the end of the month. And then basically from now on, every week, I'm going to be doing a weekly update on how I'm trading, showing the charts, show how I'm managing the loss. And I'm going to do that until, I mean, right now me trading is like a 150 max loss. I want to get me trading up to $1,000 max loss, $5,000 max loss on the day. Like that's where I want to get to. $1,000 a trade max loss, and say like $5,000 max loss on the day, or maybe we can make it like $5,000 max loss. But I'm thinking about doing weekly videos until that point, because I want to just I can trade, but I'm getting sucked in with too much size and getting ripped up on. But if I can just stick to the big picture, stick to the discipline, I know whatever the fuck size I use, it's just going to mean I make more money. The only problem that I've got now is I get sucked into adding to losers, one catches us off guard, and I get swept off my feet. I know that if I just don't take that 50% squeeze up full size, I can just hit it with smaller size, wider range once the squeeze has happened, and write that bitch back down. So anyway, it's a long one, it's a ramble, but it's important. Peace and live the dream. Okay, what's up? So we're going to go through like a quick rundown of SIAC stock that, yeah, I mean, it was a kick in the teeth, put it that way. It was about a 23,000 loss. I've got minus 21,200, but there's like comms and ECN fees that push it up, so it's just using silly size. Now, there's a number of reasons that this was a very good long. We've got like the fact that it's kind of stair-stepping. It's making new highs on the daily and it's holding them, and it's capable of having like decent-ish runs. Like we've got a run from really like the 80 cents to the 140s. Like then it ran 80% on no volume. So on 320 million volume on this day, you can certainly expect a big day which you put in, and potentially a continuation day which we almost put in. Like we had that big push after hours. So the daily is strong, the volume is strong, the sector is neither bullish nor bearish, with it being like a kind of a tech sector. The next part of the analysis is generally like I'll go into Yahoo Finance. You can also hit it on stocks to trade on Profile and News. And I just check the cash situation, and it's not like they're a shitty biotech relying on funds. They do have revenue, but the liabilities and working and operating expenses is obviously a lot higher than what it makes. So it's like sometimes it turns an actual profit, sometimes it doesn't. I mean, it's done a good job of getting its kind of earnings down to the point where it's like almost operating at a profit now. One thing that might help it operate in a profit is if it was to land a multi-million-dollar contract, and let's find it. Hey presto, Sea Change International secures multi-million-dollar contract. This was in the morning that I shorted it and added the fact that it's easy to borrow, which means everyone else is going to short it. And generally, the people who don't know what they're doing shorting don't have good brokers, and they only short the easy to borrow stocks. And the people who don't know what they're doing shorting are the ones that get squeezed. So when something's easy to borrow, you can generally guess that there's going to be a big squeeze. And the fact that they're nearly profitable and they're securing a multi-million-dollar contract and the daily's like well intact, that's like several bullish factors that and the fact that it's good and the fact shorts are going to get squeezed. Like everything about it is bullish. Unprecedented volume as well. I think I've already said it, but just to make it clear, in terms of like if you go on flash-sec.com, the float's like in the middle, but it's still rotated its float like 20 times or whatever. That's bullish. And the only other thing that's pretty bearish is the fact that like if you look at they've got 5 mil in the bin, roughly like 2 mil a month, so they've got a couple of months of cash, and they've got this S3 waiting. So they've got like a 200 million shelf approved by the board to say, when we're gonna like dilute at times. So I should have known a bit better when they push out like good news that probably the 424B5 is coming, and it did come that night. So you can actually also see on Yahoo the announcement of the 424B5. So we've got this news, and then immediately after, we've got the 19.1 million underwritten public offering. So we've got Sea Change International, it's 19.1 million, announced price and underwritten public offering, common stock, whatever. So it's like 10 million shares for $19 million, $19.1 million. The company has granted 15% of the common stock, public offering, whatever. I don't want to keep on reading through that, but you can actually see like Flash SEC like takes the SEC filings and scans them. So we can see that they've immediately completed like an offering given away. So they basically just give away stock, increasing the float, 10 million shares at $19 million, which comes off this S3. So now they've still got 180 million worth of like 424B5s to go, but they have like sold off like 19 million of the stock. Like I'm not going to go into the offering, just know that they've pushed the stock in and then diluted it, which is what every bad company does. So they might be like kind of making so basically like they're on the fringes of making money. They're not making enough, so they still need to rely on shareholders at this point to dilute. Now this was a long, and first thing in the morning, I mean look, just to show you how I traded it, it was embarrassing. I was actually adding, covering, trying to get my average up. Double bottom here ignored, and I just got squeezed, covered at the very top in the 263s. So literally from the 150s to the 260s. I've done this over and over. Sometimes I've got away with it. I've really got punished this time. But this for me was always so long. Multi-million contract, all the reasons I've said. They have got the dilution, but so like I wouldn't be in it overnight, but look decent. So I mean at the open, it wasn't really pushing with much strength. It pushed with strength, but then it didn't look like it was going to hold. So I actually got short in the 140s, risking 145. I just flipped a couple of days before on a stock as well, and it really worked out. And like I don't like some like it's just not really a short. And if I'm gonna have to short it, I don't mind shorting 141, risking 145. And if it rips from 145, you're like, well, look, it's a contract when I'm not gonna take multiple stabs at this because it could run day 2, day 3, day 4. Maybe this is all news re-released. I don't know the situation, but like if it is weak out the gate, I don't mind one shot risking fucking 2%. But and ultimately I took that, and again I don't mind getting stopped out here and then just letting it settle. But ultimately, just as on like a 16k up in the month, as just super loose, so used to winning, everything going my way. I just like added on the way up and just hoped it would come down. And then, to be honest, when we did get this like set of death candles, I just thought it's totally done now. So I was quite happy, and I was like flat on the day and pissed off because like I was like up 16, but I wanted a 17k, 18k month. I was trying to push it a bit just to just like my previous record was a 15K a month, so I was like really trying to get 17, 18 in ego and profits over or like process to come to ego and profits, and ultimately I just didn't really click on that. The big picture is always along. So these higher lows, this kind of like, that's not drawn perfectly, but you can see like the wedge kind of breaks, the higher lows, the wedge breaks, the front side climb. I just missed it all, and the chart was telling me over and over like what we're gonna do. It's gonna rip in the morning, get ahead of itself. Then because it's easy to borrow, we're gonna trap a bunch of shorts in this channel, and then they're gonna get squeezed out all afternoon and into the evening before we drop the offering, save some money, and operate for another few months. And the core lesson is like, the core lesson is don't add to your shorts ever. Don't add, and always have a risk level that you're playing off, and don't get sucked in. So I've got some core rules basically from this, and it's like, have 3 shots at a stock, each with a risk level, and never add. And basically, and I've got a max loss on my account now, $500 loss, 150 max loss of each trade. But you shouldn't be playing this. Big picture is it's a great long setup, and it was. But if you have to play it, I don't mind taking the short in the 146s, getting stopped out in the 147s, and just leaving it. Even when this death candle comes in, you just start thinking, all right, maybe if I get a nice bounce somewhere, I can take this. Like, even if you've got small size wide range, 153, you get stopped out 177. Like, you might hit your max loss for the day and you fucked up and you lose $300, but you don't lose 20 grand. Again, it's not a short, but if I'm fucking stupid enough to play it, like, there's 2 safeguards. A, you don't play it because it's a long. The big picture is a long, so you just don't play it. If you're fucking dumb enough to play it, at least have risk levels to protect yourself. And I just neglected both and paid the ultimate price. And these ads, this is the culmination of months of bad trading. So when I like, I've kind of said to people, like, I'm not that bothered about the loss. Like, yeah, I lost 20 grand, but like, I'm in a position in my life where I can kind of afford to. You can never afford to lose 20 grand, but it's not wiping us out, you know what I mean? Like, I was up 100, I'm now up 76, and trading's not even me. Freelance is me income, not trading. So like, this is bonus money. I just give back some money, which is way more than I ever should have made. So that's how I see it. But in terms of taking the loss, this is a culmination of getting away with bad mistakes and bad trading and making money through bad judgment over and over and over and over and over. Then getting like lots of scare signs and warning signs of almost losing tons of money, but then not losing tons of money, and then ultimately losing tons of money. I deserve it. I paid for it. I fully accept it. It's part of the game. The thing is to just learn from it. Do not add to losers. Like, and honestly, like, if you don't, like, you have to cut the loss, but if you don't, the one thing you fucking definitely don't do is add. Like, fine, some people don't cut losses sometimes. You let a loss run, you get annoyed. But what you definitely don't do is add to that loser, because all the other shorts are adding to losers. And when too many add and then it keeps on going, everyone has to cover and it just explodes. Okay, so now we're going to kind of go through where I started with trading safely, with some basic rules like don't add to losers, try and play the bigger picture, don't scalp, and if I short, always it should be with a risk in mind. If that risk is broken, you should always be looking for a sign that it's now the backside. It's not the backside. Like, you don't just get out and then get straight back in. Like, you're looking for another sign on the intraday to say that this is the backside. And the ideal way of trading, what I'm going for, is to play setups on the big picture that are just going to fail, and having a good enough risk where I just let it play the full day. I don't need to be early on the short. It's better to be a little bit late than very early. And I'm just trying to let the big picture play out, and I'm not getting too worried about the intraday swings. Like, that's the way I'm trying to trade in March. This is the way I'm going to trade fully all the time. It's less stressful. There's bigger gains. You don't get sucked in. It's less emotional. And who the fuck wants to be a scalper anyway? Like, it's better to play big picture always. So let's say I was started. Like, I've got March 1 in the diary, like a new safer way of trading. -155. You can see I've took a few more trades because the way I'm trading with stops in, wide range, it gives us more like free thinking time to like look at what else is going on in the market, which is another big advantage of this style of trading rather than big size, fingers on cover, 1% risk, trying to get out, and it blows through. You didn't cut it in time, and then you're 10% down on too much size. So I can't actually see the cover here, but this looks like a good start. We've got a short off a key level on a chart with resistance on the daily resistance intraday, and we've got a cover at 655 there. I don't know if I swung that or what, but anyway, like I took 50 cents with like 10 cents risk. It's a good start. Equally, ASLN, I'd like to be a bit more patient. You can say I'm trading smaller size, testing a new strategy, but we've let it open. I know it's give a lot back, so I've let it open, shortened 6, risking 650, and then you've got covering down in the 5. So you've got like 50 cents for a dollar. It's like 2-to-1 risk reward. I'd like to have a bit more patience there, but you can see that I've started following the rules. When you start seeing these cluttered trades and this kind of messy stuff, you can see that I'm like trying to follow the rules because you can see a lot of shorts, a lot of covers. But then I'm also not, because like that's frustration. You just getting in, getting out, getting in, getting out. That breaks the rule. You've got to, if you get in and then you end up getting back out, leave it 5 minutes, let it show a backside confirmation. You can actually see that death candle is the backside confirmation. I should be kind of, even when that death candle happens, I mean, you prefer a bit of a bounce, but you've still got from the 3s to the 250s, but I'm getting out in the 310s, 290s because I'm just so relieved I didn't get squeezed. I think you've obviously, a good entry is even that lower high of the head and shoulders right here. But again, starting to slip already. Not good. There's a breakout long. Obviously swung it. I don't know if it worked or not. I'm not too bothered about that. Again, more longs like first green day, buying the dip off VWAP, swung it. Obviously looks good. Obviously made money, but it'll be on the next day. So it's nice to incorporate some longs. That first red day, shorting at the open, thinking it's going to wash. Got squeezed, got straight back in, got squeezed again, lost $355. It's not great. That cut is too high. I should have been cutting the 4s, not the 440s. I lost an extra 10%, but I mean, it's kind of sticking to the strategy. So March 1, I didn't really do great sticking to my rules, but like I kind of had a plan. Forced a bit of action, broke a rule. In terms of this day again, like you can see how I'm trying to keep with the strategy, but there's still too many entries here. Like I'm short. Ideally, what should be happening is you're shorting the 850s and you're sticking to the 850s, and then you're covering the 670s at the end of the day. This you can easily let it chop around and get out at the end of the day. Why I want to like lower my average down here in the 7s, only to have to cut it after. I kind of don't see the point in that. I mean, I don't mind shorting here, and then if I think it's just going to fail all day at the open, adding here and keeping me risk like 850, 9, something like that, where it's double top. Like I don't mind even break even, but I don't want to be like getting panicked out and jumping back in. So again, and also like this chart can go down to the 5s. Like I don't know why I'm covering in the 7s, just because I got a red candle. I don't love really that. I mean, I don't mind one cover here and then really like adding it back into the squeeze instead of covering, like, but again, like I'd rather just be all in and all out. I'm really trying to trade less. Again, like we can see that I'm like trying to like nail a system down, and it's much harder in real time than, it's much harder like in real time. It's much easier in hindsight. So again, like I don't mind this short in the 10s on a beaten down chart. I don't know if I should be rushing to add at the open. I think I should be letting things play themselves out between 9:30 and 10. And again, like I don't mind this short and then getting stopped out, and then the parabolic starts to turn over, and then just taking a new start. Like see like you're short $1,000, you lose 2% on the way up as it breaks through, or 3%. You lose $30 if you're $1,000 short, but then you get back in the 11s and you write it down and take like 15% down to the 9s, 16%, something like that. You're making a lot more on the way down by just taking one paper cut on the way up. Khan was just a long, so yeah, that was just covering the previous long, the first green day, so that obviously did all right. March 3, no rule breaks, boring but steady. Well, boring's better than big blow up losses. So again, yeah, you can see I'm kind of doing all right. Like we saw that breakdown of this trend, so I just jumped in 509, risking 509, covered a bit early, could have held it and just been a bit more patient, but it's not bad. TRXC, don't mind the short. I don't really like this ad out. I'm kicking this out of my game. Short cover, got back in. I don't know why I'm all this messes here. I don't know why this messes here. You basically you were short, fine. You added a bit when you got a slightly better average. I don't think that's adding to a loser. I think that's trying to build size into your plan. There's a difference. Cutting, and then ideally I shouldn't be jumping straight back in, but when it slams and rejects the breakout level, whether it's there or whether it's in the 525s, 540s, I don't mind, but that 540 should be a risk level there for all day. These are just a waste of trades. You get the same result by taking the 540s and covering in the 450s, rather than covering, adding, panicking, covering because you're like a bit worried about your size, then you're out of the trade. Like, why not just take the 540s and cover at the 450s at the end of the day? It's easier said than done, but if your risk gets broke, your risk gets broke. It's as simple as that. NNVC gap crap day 2. I think that's just something. Yeah, this was solid. So like, I don't have the NNVC. I don't have the daily trade, sadly. But you can see I took it somewhere in the 7s and covered it somewhere in the 560s into the drop again. Not patient enough, but it's fine. SLGG made 1600, but played it terribly. Like, got away with murder. This 1600 is an example of a 1600 that I made, but easily. But I've just give it back and more on the 22,000 I lost on SIA. There's no harm in letting this push at the open. Just when you get it intraday risk level, like, why am I adding into pushes? Why am I adding it all? You want to be shorting around the 670s, 680s. Just leaving it. This is all mess. This is all me just panicking. Shorten the 680s, breaks through, leave it. If you have to get back in again, say you lose $100 on the way up, if you have to get back in again as the trend breaks, we've got this clear trend break, get back in the 750s. When it stops you out again, you've lost twice. It's still front side. It's a bullish pattern. Like, you lose a couple of $100. I should have lost $200. This is like one of the worst $1,600 I've ever made. Should have lost $200 because that discipline and strategy means I don't lose 20,000 down the line. SKT, I don't love the front side shorting, but and honestly, because I'm front side shorting, I'm front side covering. Like, I don't want a front side short and front side cover. I want to backside short and leave it. Like, I literally front side shorted and just got in, got out, scalp. $97. If I'd have been a little bit later and more confident instead of early, not knowing how early I was, like shorting from the 22s, risking the 25s, I get down to the 16s, I risk 2, I get 10. Instead of being early and panicking and making a couple, like, fucking $1. Nothing much to shout about there. New strategies making more sense. I don't know how I can say that, because this is another $1,000 where it's like, I know it's a one and done. It's a low volume resistant short, but and honestly, to be honest, when I'm saying it made sense, it kind of made sense because it kind of saved us a little bit here. So I was short in the 240s, and if I'd have rode it to the 4, I'd have been down $6,000. But say I'm short and stopped straight out, and then when it's exhausted a bit, I've like shorted the 280s, covered a bit, And then as it's ripped up here, I've just lost discipline and took a right 25% from the 3s to the 4s. This is just a constant battle of short side shorts, front side covers, front side shorts, front side covers. And on this one, I get away with it kind of thing. Like, it starts to fade off. Most of them do. It's $1,000 that, like, I made, but and honestly, like, if this breaks through the 4s, like, you just can't lose 25% on the way up front side. I mean, why not just, again, like, when it squeezes, you're out. So, like, you short here in the 280s, stops you out, you're out. Wait for the next slam, which is this big slam. Wait for the next big slam to short into, or the next sign that it might be backside. I'm back and short in the 360s. Maybe I get stopped out one more time. It takes us 3 attempts to get it, and then I'm short the last time from the 360s to the 260s. But if I get stopped out twice and I lose $100 each time or $50 each time, like, all I'm really losing though in terms of percent is, like, I lose a couple of percent on this short. I lose a couple of percent on my second short around this area, getting stopped out again. But that's, so I lose like 5%, 6%, but the third time, I'm likely taking 360 to 260 or somewhere in that range. So I'm making at least 20%. So I'm making still 2 to 1, 3 to 1 risk reward. And keep in mind, with something of this volume on a relatively clean chart, I don't think it's going to top out at 10. So if I take small size, bigger size, bigger size, I get the most money at the most likely time it's going to fail, and I get all of this downside rather than having the downside on the way up, full size. Eyes is just getting sloppy. Not, again, it's like, it's sloppy. I mean, I'm covering on the way up, but, like, why am I not covering in the 8s? Why am I covering in the 11s? Like, just dumb short. Slightly better. I like this a lot. This was a good trade. I made 1,300 with no stress, and again, this is like, it's kind of clicking again, but me patience is still not there. Like, short in the 23s, risking the 26s, very good entry, very good short. Don't know why I'm taking some off there. Don't know why I'm taking some off here and here. The whole point is that you think this is coming back down to the 10s. And it did come back down to the 10s or the 11s or the 12s. The whole point is that you think that this is overextended and the big picture of the move is over. So why are you shorting in the 23s and covering in the 22s? Like, fucking, if I have to, I don't mind, like, covering the 15s and 16s, because it's, you've took $10, 30%. But either, if you're wrong, you're wrong. Like, just attack it higher. Shorten into resistance again. Like, if I think it's falling through and I've got a clear risk level, short. I don't mind this ad, because then I've got this risk level to play off. I don't know why I'm covering here. Just it either works or it doesn't. Covering a bit here and then adding respecting my risk. I'm still really kind of, at the moment, this is a rule not to do this. I will not, once I'm in, then I'll take the short and then I'll get out of the short and then I'm done. I don't know if I like this playing with me average in this area, trading around the core. I'm just not comfortable with it after that loss, but I don't mind that. Again, not patient enough. Like, it went down to the 290s. Why the fuck am I giving 10, 12, 13%? In relation to EAs, daily's like in the middle, kind of strong. If I think it's like, this is an example of the daily not being bullish or bearish, me not having conviction on a trade, therefore just scalping. Don't like it, waste of time, make 120 this day, lose 500 the next day. Ogen is another example of just not having conviction. Why have I got 20 different orders here? Just take once in, once out, just dumb. GME was a good example of being rewarded for bad rules. Again, might have made $3,000, but you would have made so much more by not getting. I was down about 1,500 on the way up. And it's just out of your control. Like, a trade can't be out of your control. So I shorted and covered, but then there was no sign of it coming back, and I needlessly went from 300 to 350. Like, I needlessly went like 13-14% down. Why don't I just sit and wait? And adding is ridiculous. Why don't I just sit and wait? And when these red candles start to come in, take your full size, and so you don't have full size minus 12%. You've got full size and it's coming down. Like, take your full size when it shows the chart is changing trend. It was a good trade, but it's bad rules. Like, it would have been a good trade, it wasn't. Now, GME just sets off a ton of other bad discipline. Like, this is just ridiculous. Like, again, I'm covering, but I'm adding to losers. I'm all over the place. Costs, shorter to breakout. I don't have conviction. I'm scalping. Don't want to scalp anymore. OBLN, this is a very bearish setup, which enabled us to have more conviction, but these high vol res shorts do go further than you think. But this is how I'm meant to be trading. Like, big picture is bearish. I've got a set risk level, obviously short in the 460s, risking around the 5s, where it's topped twice here. Needed more conviction. I've left 10% on the table plus. But it's perfect, and this is an example of a trade. Short 480, risking 5, 20 cents risk, 5%. There's no reason I can't get to a point of taking $10,000 position, risking 5%, which is $500. And then, but I'm actually taking, like, from the 480s to the, like, I'm taking about 12%, 13%, 2.5 to 1 risk reward, which is meaning, like, I'm risking $500 to make about $1,300. There's no reason why I can't take this trade with size on a high volume resistant short. But I need to have a month of trades like this before I even consider having me risk at 1,000 or something like that. My risk is 150 per trade, 500 on the day now. Accela, I like that I stopped out at higher day. This isn't that, again, perfect trade. Like, I've obviously had the scare of JMA maybe, and I'm trading better, but this is a multi-day gapper where the gap's too big and the volume drops. It's a very bearish setup for me. Took it out of the open because the can fail. And again, like, I love this trade. Like, even with $500 risk, like, you've got your short, you stop out for 1 or 2%, you wait for more of a backside to confirm, you get back in the 650s. I don't need 3 entries, but I guess I'm trying to find an average. I'm trying to get into the bounce. I don't mind that. I'd still trade like this now. But again, I'm like panicking out and I'm covering too quick. Like, at least I left a piece onto the 420s, but I need to hold more size for longer. In terms of ENTX, again, you can see it's a 52-week high record volume. It's a scary stock. Actually, long this on the wedge break, but then I'm adding into the short on the way back. So I actually did well by taking it long. Read it well long. Read the pattern well long. I love this kind of setup where you've got the wedge break, you've got VWAP, you've got the higher lows, you've got the tight range. And you've got like 52-week highs, high volume, no resistance. Everything about this is a great long. I don't like the short at all. I don't mind, again, like, as this rolls over on the lower high. I mean, there's no harm in taking 7 risking 720 or small size wider range 7 risking 785, 80 cents, because you actually do get like $5 on the backside, but it's kind of front side shorting. But I don't mind it as long as you've got a plan and risk in intraday confirmation. OCGN, there's a lot of resistance, there's not too much volume. I just need one shot at this. I don't know why I've took 8 trades to find this entry. In terms of the covers, it was pretty good. Like, not terrible, but why not just cover once? Why am I covering 5 times? SPPI, again, like, I'm trying to find an average here, risking the 430s, out in the 360s. Like, it's an okay, it's a good trade, but I'm just trying to, like, either the big picture works or it doesn't. I don't like this taking bits and adding bits. Just, it works or it doesn't. You're in or you're out. This one worked in my favor, but I'd just rather not do in the future. NVFY, short in the 650s, risking the 718s, covering the 5s. I could add more patience. I'm covering like too many times. Like, just either it's time to cover or it's not. What's with the indecision? Don't know what that is. Some random ones. ENTX looks like a long. Yeah, that's just the long that I took before. GME, again, like, averaging in and getting stopped out is pretty dumb. Like, this is why I'm trying to take less trades and just, like, getting in. It either works or it doesn't, getting out. So, like, adding into a winner and then lowering the average and getting stopped out. Like, again, it's not terrible because I'm still playing off the same risk. I'm just building size, but it's not the end of the world. It's just one of them things. The setup wasn't that good on the daily, I don't think, anyway. But you have to lose in trading sometimes. But SIEB took a short thinking it had topped out and it pushed higher. no big deal. It's a shame I didn't like get back in at the open. I've obviously forgotten about it. I would have got stopped out anyway, but the setup for me is perfect. This is unexpected. I would have gladly lost a second time on this. March 15th, again, we've got like another kind of in-between daily, not really a long, not really a short. I don't mind like hitting the backside and just holding. And I did an okay job of like taking some, adding some, taking some. I don't, again, like I would rather just skip these 3 trades out and take it all off, yeah. Like I don't like messing with my average. Check was a good trade. Bullish setups, I just waited for it to open, see how it would open. Shorten the 4s, risking 450s. You've actually got $1.50, 2 to 1 risk reward. It's a bullish setup, but I don't mind seeing it open and giving it one shot to get stopped out. Like often you can make money, and when a strong chart opens weak, it often fails. So if I've got 2.5 to 1 risk reward, and I've got like the probability that it's going down, big picture, I don't mind, because like big picture, if it opens weak, in my experience, probability is it can fail more than half the time, or at least half the time. Therefore, if the 2.5 to 1 odds is on my side, it's worth shorting a bullish setup. Again, like 4 risking 450, covering in the 3s, 2 to 1. I don't need to do this. Like again, I'm in here, I'm out 12 o'clock. If it starts going sideways, it's fine, don't mind. But I don't need to be in multiple times. I just need to be in once and out once, or in twice, finding an average. Maybe I don't mind that ad, but like an out twice, like I don't want to be in and out like that many times. ASA, I saw this a bit late. Again, like just trying to get a decent average. I don't mind these, finding the average, building the size, risking 630. I don't know why I don't let the trade work out. It's just another example of not having conviction. I've left like a buck. Like if you're getting in, like again, like 5.75 down to the 4s is $2 for, again, like risking like 45 cents. So why am I getting in the trade if I don't have conviction to hold? I don't know, but I'm going to force myself to hold if I get in. This is where things start going wrong. Like SSY is an example of where things are starting to go wrong. Like, and it's not, again, like it's a bullish setup. It's a 52-week high. I don't know why I'm really even in, but I don't mind. I'm short, I cover. Then I get back in and I cover. This part of the trade is pretty disciplined. Like I lose a couple of percent both times on the way from the 3s to the 4s. So this goes from 3 to 4. I maybe lose about 6%, which I'm totally cool with, because if you do get near the top, you take it from the 7s probably down to the 3s if it gaps down the next day. So you're taking like 50% for losing 8%. But this is where things went wrong. Adding in the 5s, I'm adding in the 5s, then I'm adding in the 6s, then I'm adding in the 7s. So I'm taking huge size with a low average on something extremely front side, where just let it play out. Like it's much easier to like just let it go. See, I lost. It's a bullish setup at the end of the day as well. That's the crazy thing. Like it's bullish, and I'm playing it reckless. It's like 2 of the worst things you can ever do. So if you have to play a bullish setup, at least play it carefully. So like short on the 350s, you're wrong. Alright, maybe I'm just gonna wait till this shows some serious confirmation of backside. When you've had a huge move up and it's like heavy, it's not so much give a serious sign of backside, but it at least is super overextended and due to at least come down to VWAP. Taking that into account, maybe the 650s, risking the 750s, smallish size is fine, and like you've got $1 for $2. Like that's a good risk reward, and it's so overextended and it's starting to look heavy that it's the type of trade that's not perfect, but I don't mind. All of this stuff in the middle, I don't need any of it. I need this cover here, and I need like this single short here. I don't need any of the middle. All this is doing is getting too much size, fucking with me average too much, not having a proper plan. I'm reinforcing and ruining the discipline that I need for a plan. I need to have a plan and stick to it. Or every time I add in and out, I just get less disciplined at having a plan. And at the end of the day, if this does squeeze, me average is so fucked and I've got so much size, I'm just fucked and it squeezes. Much better off just having a short here, and if it works, it works, and if it doesn't, it doesn't. But I've got set risk never changes, and me loss is the same, right? It's the max loss at 150. I'm not getting sucked in too much size. Then if this squeezes, I'm down a grand. Like, that's not the case. If this gets through here and squeezes through, I lose the 150 that I plan to lose at 10 o'clock. Not a bad VWAP rejection short. Again, not bad. Like, this is, again, bullish setup, like 52-week highs, record volume. Let it play out. Death candle, hit the backside. I should be covering in the 370s, not the 4s. Left 10% on this again. It's a bullish setup, so there's a lack of conviction to hold. Thinking, oh, wow, I'm lucky I got this. Well, if you're lucky to get it, why are you in the trade in the first place? So, again, it's about just having conviction and holding. I mean, this swipe up is unfortunate at 330. I'd like to think after all the sideways consolidation, I'd be out anyway. Canf, 52-week highs, record volume, weed sector, I think. Again, I just didn't have the conviction to hold it. Too much volume, strong pre-market. But, so that's kind of annoying, but again, like, it's, at least I had the discipline to take the short, got stopped out, but when it further rejected, I've got a second short of 4, risking 430, it's an 8% risk, so I've got to have smaller side, but why am I just shorting here and then covering here? Like, if you're going to take the short, either lose or write it down, and it actually was a beautiful beautiful short that I covered way too early. I don't mind this. I don't mind this at the 4s, really. But just a lack of patience. I left 25% on and I only took about 4%. STRM, trend break short, no conviction because I'm scared. Like, there's too many times where I don't have conviction here, and I'm right every time. Check, first red day. Again, like, I'm pretty sure I'm shorting off the 270s. I don't know if I'm like small size, wide range, or if I'm like risking VWAP or whatever, but again, I cover way too early. First red day, don't know where I'm short there. I don't know if I went long there because I thought it was going to squeeze you. I think I went long and it just didn't work. Not as bad. Like, I don't mind this too much. Short to resistance, like, I'm short, stopped out. Pulled back, so I had another go. Short, got stopped out. This was maybe a bit unnecessary, but it's fine. Short, stopped out. Let it rip. You see how this all rips without is? Fine. I don't have full size. I'm not adding. I'm not even in it. This, for me, I'm making money when this goes up when I'm not in, because I'm going to hit it all on the way back down. I think it's rolling over. I think we've got like some sort of triple top head and shoulders. Yeah, take a short. I'm wrong. Stopped out. Don't need three shorts here. All I'm doing is scaring myself, so I've got no conviction and I cover too early. When you've got it right, you've got to write this down. There's $6 or $7 I missed here. This is SS. We've already saw this. This is when my discipline was starting to get bad, and then I just stopped tracking days. Like, we've gone from the 15th or something here to the 31st, and so I took that loss on SIAC, which you saw, and then I was like, right, you've just been neglecting habits. You've been taking advantage of the fact that I basically took advantage of the fact that, like, I've got good freelance wage. Money that I make trading is a bonus. Like, it's not me salary. I've got good freelance wages, good freelance advertising clients. Trading is a bonus. And when I'm up 16,000, that's bonus money for us. It's not me income, really. I don't see it that way. So I just started neglecting trading, neglecting rules, more money than I knew what to do with. Stopped doing the basic discipline things like saving the charts, and the lack of discipline crept up in factors and led to SIAC, like adding to that loser. And this is back to strict discipline. RKDA, like, not totally perfect, but shorting, getting a good average from the 346s. Adding when it confirms, still off the 346. That's adding to the winner with the same risk, with the same plan, with a max risk in mind. And covered early, but it's not bad. With VTSI, again, I've took me short, and I've actually, again, like, just get in once, but at least I have set risk on higher day. Got stopped out, wasn't the high, so I got back in, like, worked fine. Like, I had decent patience here. I got stopped out the last at the 6s. I don't need to be getting in and out as much, but it's certainly on the right track. YVR, it's the same mistake we're consistently seeing. You think it's a bullish setup. This, to be honest, I was trying to get short in the 480s, and because I had a bad entry, I got out early. And I don't mind that. Like, I was meant to be short 480 risking 5. When I hit the button, the candle dropped. So I ended up in the 460s, and I just thought that wasn't the trade I was planning on. So I just got out. So that actually is a very good trade. It doesn't look like it, but it is. And then going back to, and then like the most recent trades, the trades of, let's see, trading months, 21. So then we're getting into April now. So I'm going to have to go screenshots. Trades. 21. So then this is my most recent start in April, following all. I need to get a drink one sec. So these are my most recent trades in April where, say the losses are very small, $14, $6, $12. And I still had this, I don't know, like 280, 340, made like $700 or something on the first day of the month. And I don't really care about the money or the profits, it's about how I play. So ACY, crazy volume, history of crazy running, clean chart. It's definitely a long. Love this wedge break here, but I missed it. I'm looking for the backside. And I love that I'm like, we can say like I'm in once here. You've actually got quite the nice like wedge here, but then I'm short in this area. We've got like the top. I'm confident enough, like that's kind of backside. So I take a stab in the 1436s. I can either risk 15 or risk above 16, like above this level or above higher day. I can take either. And it's not bad. Like I made like $3, something like that. Not a bad trade. 14 to 11, like yeah, $3. Not bad. FNKO was a long, but again, small size, wide risk. I quite like this long as well. We've got this kind of breakout area on the daily. And when it starts pushing, like I try and get in on a dip here. Risking low of day. I'm like, all right, well, small size, wide range. I'm short in the 2250s. Risking the 2150s. I'm risking $1. Never breaks me risk. It actually is like a kind of a higher low there. So don't get too despondent on your longs if it doesn't go up straight away. You're playing the big picture. And luckily, I'm like, I just don't feel like it's got the strength and I'm out at the right time. So that was quite nice. But if it broke me risk, it broke me risk. FTFT. Again, big picture. Bitcoin stocks were hot. We've got this breakout. This is another long. We've got this like multi-month breakout. I take the wedge break long here. I'm playing the big picture, so I don't sell. I get stopped out here. I lose a couple of percent. It's nothing. Then the offering comes. FTFT is more of a standard wedge break. This is again a long. I'm thinking it's going to rip up. It's got a history of kind of decent days. Play the wedge. Doesn't work. Get stopped out. No big deal. Snow, again, like high volume resistance short. Textbook bread and butter, that's the way I trade. I've got a short risk in this high of day level. At the open, it doesn't really show much strength, so I get an ad still playing off this level. I'm just building size to my maximum risk, which is $150. And then I don't get scared out of this squeeze because my risk is 10. I'm in from 10. I've got an ad. It's fine. My risk level doesn't change. My risk amount is still within the 150 max risk. And then so I don't add cover, which I've done a lot of times in the past. I let it shake out. When this squeeze doesn't rip through higher day, doesn't break my risk, get back in, and then nice cover. This cover was just random, like getting out into a random push. It was pretty dumb. Should be covering more in this range when it just doesn't break down the 820s. When the 820s hold all day and it doesn't break, that's more when I should be covering. Sun W, again, like like longs just fucking clicked. I don't know how or why. Like Nasdaq longs just clicked, but the breakout of this channel in the 17s, the history of running, big picture on the daily. We just need the intra confirmation. When we get this push, I'm more than happy again to be like buying in the 1580s, and I'm probably risking 80 cents on the 15s. If this falls through lower day, then so be it. But big picture says it's more than likely going to run. I'd say more than 50%. So if I'm risking 80 cents, the idea would be to sell in the 20s, 21s, 22s, 23s. So I'm risking 80 cents to get like $10 a share. As it happens, I'm still improving at longs, but I end up taking like $1. So I risk $1 for $1, but I still think the bigger picture was on my side. So like I thought the chances of this having another leg, at least, like, even if it has another leg and fails, say it's like 65% sure it's going to have another leg. And my risk is slightly above, the probability is risk reward is slightly above evens. So if I take evens for 70%, then that's totally cool. Like it's a decent long, worked. And lastly, UXIN, bullish setup, bullish volume, and I just thought, again, like we've got the double top, it's come to the end of the day. This doesn't really day two, although it has got the record volume and it can day two. I was willing to give this a short, shorten like the 199s, risking the twos. Simple as that. And I thought, look, I'm risking like 5 cents. If it does fade off after hours or into the close, I'm going to like risk 5 cents for like 20 cents. So this is a pretty bullish breakout with record volume. Could easily day two. But I just thought the risk reward was good. I thought like most of these stocks are shitty penny stocks. They always fade after hours and it'll be like a 20% gap down first red day. I didn't mind getting in around the 197s, risking the twos. It's like, it's probably, even this is an example of something that is like more likely not to happen. Like it's more likely I'm wrong and it goes higher, but I don't mind. In hindsight, it's not the greatest trade, but I don't mind if I've got fucking 6 to 1 on my risk, but it only happens 30% of the time or 20% of the time. I'll say I've got 8 to 1 on my risk, but it's like only happens 30% of the time. It's still profitable repeating the process, but I'm not sure how good a trade this is. But anyway, sadly, they ripped it after hours, and after hours was manual orders. So like I did take like a bit more of a loss on that one. And then this trade is unnecessary. This trade, risking higher day. Again, I'm not perfect. I'm still not perfect with me risking cutting losses, but I ended up covering, and I ended up taking it from like 230 to 2. So like I got 30 cents and I lost a few cents on the way up a few times. So again, not the perfect trade. This is the worst one, but throughout the rest of the month, you're going to see more and more and more kind of trades like this, like 1 entry, 2 max, once out, twice max. This is less bad. It's like, but yeah, this isn't bad. I mean, again, like trying to eliminate this cover here, but you're basically going to see anything but like lots of red on the way up and lots of red on the way down. Like I don't want this indecision. I don't want this lack of conviction. I'm either in for the big picture, whatever happens, or I'm not taking it at all. And that's a wrap, guys. Thank you so much for watching. If you made it all the way through, just write RISKJ, RISKSJ, RISKJ. Rate that so I can see who's like watched the full thing for an hour. Thanks for watching. I'm going to be checking in with you guys fucking next week. We're doing weekly videos again until my risk is under control.